Hello and good afternoon. Welcome to another episode of the Markets at a Glance series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about the trading in the New York session. We'll be looking at the market open. We know that yesterday was a public holiday in both the US and Canada, where they were celebrating the Labor Day celebrations. So for today, we'll be looking at increased market volatility as there was little to no participation yesterday. So we have already seen a lot of activity happening in the markets during the Asian as well as the European sessions. So we should be expecting to see a bit more going forward. So once you join in, kindly say hi in the live comment section, and these will confirm that everything is working just fine. So as usual, I would like to begin with a disclaimer that this session is not investment advice. It's not a recommendation to trade. So you should always do your own due diligence and practice proper risk management. So let's begin by looking at the economic calendar and try to understand what are the key events that we're expecting today. So clearly, today being the 3rd of September on Tuesday, we had news in the early morning, majorly focused on the CPI in Switzerland, which came in at 0.0% for the month of August, which basically means that the overall annual inflation dropped to 1.1%. So with inflation dropping further below and getting closer to the lower band for the Swiss National Bank, then we could be seeing some further rate cuts. And as we mentioned on Monday, yesterday, the Swiss franc is becoming a favorite currency for the carry trade, where investors consider borrowing cheap from Switzerland and investing that money in other markets where there is much higher returns. For instance, they could pick US treasuries as well as American stocks. So we also had GDP data coming in for Switzerland quarter over quarter, which was up 0.7%, higher than the previous reading of 0.5%, and also higher than the expectation, which was 0.5%. So Spanish unemployment change came in at 21.9, missing expectations of 34.3, which was basically much higher than the previous reading, which was negative 10.8K. So going forward for the rest of the day, the main focus will be the ISM manufacturing PMI and the ISM manufacturing prices. So ISM manufacturing PMI is basically a measure of the trends in the manufacturing sector, especially concerning the orders that are made in the manufacturing sector. So this survey is done on about 300 businesses. So the survey is of about 300 purchasing managers, which asks respondents to rate the relative level of business conditions, including employment, production, new orders, prices, supply deliveries, and inventories. So this is done every month by the Institute for Supply Management in the US, and it basically indicates, I would call it becomes a leading indicator of the manufacturing trends. So levels that are below 50.0 are considered to be contractionary, and levels above are considered to be expansionary. So as you can see, as per the previous reading, we had seen levels below 50, meaning that the manufacturing sector in the US has been contracting. So if we turn these into a line, then you can see that for quite a period, I would say since November 2022, we have been seeing a majority of the data reports showing industry contraction. So in this case, for today's report, we'll be expecting a 47.5 reading, which is basically much higher than the previous reading of 46.8. So if we get a much bigger improvement, it basically indicates that the US economy is strong. So if it's weaker than expected, then it basically implies that the US economy is weak. So generally, we interpret these with a positive correlation with the dollar. So when the US economy is strong, we tend to see the dollar strengthening. And if it happens to be weak, then we see the opposite, that is the dollar weakening. So as at 5 p.m., we'll be expecting the ISM manufacturing PMI. And if it comes higher than 47.5, then we could see a continuation of the strengthening of the dollar, which started on Monday, yesterday. But then if we happen to see a much weaker than expected outcome, then in that case, we should be considering a much weaker dollar. So we don't have any other major news coming up in the afternoon. So we'll be fast forwarding to Wednesday, the September 4th, that's tomorrow, where early in the morning we'll be looking at the GDP data from Australia at 4:30 a.m. And then we'll start looking at Kaizen services PMI for China. And then we look at retail sales as well as services PMI for the Eurozone, including Germany, Spain, Italy, France, and then overall data at 11 a.m. So this is when we'll be having the next session, that is the market snapshot at exactly 11 a.m. And on that session, we'll be covering what will be expected of the major news of the day, which is the interest rate decision by the Bank of Canada or the Central Bank of Canada. So overall, there is an expectation that they might cut interest rates by 25 basis points from 4.5% down to 4.25% ahead of the JOLTS job openings at 5 p.m. And of course, there will be a proceeding press conference by the Bank of Canada at exactly 5:30 p.m. So this being the NFP week, there is more focus on the non-farm payrolls, which will be coming up on Friday. This should be at exactly 3:30 p.m. And that's the major data that is on focus this week. So besides that, we know that there is an event by Apple. So the event by Apple is getting close by. Just trying to search this quickly. So it's around September 20th, which is about 11 days from now. So Apple will be announcing its latest devices, including the iPhone. So mostly, as we have been talking about the current trends in the market, then we know that whenever there is a big announcement and people are very positive about it, they will not be waiting until that day to begin buying the stock. So there's a good chance that if there's positive sentiment about the Apple announcing its new devices, then in this case, we should be expecting that the stock could rally, and with it, we could be seeing much further gains in the Nasdaq as well as the SP 500. However, from what we are witnessing this week, especially Monday and today, US stock market indices tend to be weakening. So today, it seems likely that we could be seeing some further downside given the current market structure, which we'll be covering as the second part of the presentation today. So on the side of the Fed and its interest rate decision, we are still pricing in quite a strong interest rate cut on the September 18th meeting. So for the 18th meeting, we're expecting a 25 basis point cut with a possibility or probability of 67%, whereas for 50 basis point cut, we have a 33% expectation. So it still remains likely that the Fed will go for a 25 basis point cut at first, and that is expected to drive the market sentiment for the next 1 month as the US approaches the November elections. So key highlights for the day, especially this morning, we'll be doing this from the Financial Juice website. So some of the things we have seen as the key highlights. Sorry for this, trying to open the summary for the session. So global stocks retract awaiting US data, Europe market trap. This for the European session. So stocks fell as traders anticipated data releases that would provide insight into the health of the US economy. That's the ISM manufacturing PMI, as well as the Fed's interest rate path. That's for the 18th meeting. So Euro stocks 600 fell 0.2% as mining stocks fell in response to lower commodity prices. US contracts fell ahead of Wall Street's reopening after Labor Day weekend, but an index of Asian markets was barely changed. So the release of US manufacturing data later Tuesday will signal the beginning of a busy week of economic reports, culminating with non-farm payrolls data on Friday. So in August, a similar spate of disclosures sparked fears that the US economy was on its way to a hard landing, jarring markets. So the yen gained as Bank of Japan Governor Ueda reiterated that the central bank will continue to hike interest rates if the economy and prices meet expectations. So the dollar continued its modest gains from the previous 2 trading days. Treasury yields were hardly changed. Oil prices fluctuated as traders weighed fears about China's bleak economic outlook against supply disruptions in Libya. So this is something we had mentioned on Monday, that oil is seemingly bearish, and this is mainly as a result of one, there is increased production, and we're expecting even further increase in production from OPEC plus countries in the month of October. And at the same time, China, which is the world's largest importer of oil, had a very dampening economic report that showed that its manufacturing has been weakening, and they reported the lowest number in 5 months. So as a result of that, we have an overall expectation that oil prices could continue going down. So as for the yen, I think it's the biggest mover of the day. We have seen quite a remarkable recovery. Remember, yesterday the yen was weakening. We saw some big moves, especially in pound yen and USD yen. But for today, we are seeing the yen recovering. So it's the best performing currency for the day. So looking at the relative performance for today, the Japanese yen is up 0.85% against the dollar. The Swiss franc, as we mentioned, it's becoming a favorite, and now it's up 0.22% against the dollar, whereas the rest of the currencies have lost against the dollar, with the Australian dollar losing the most, down 0.7% against the dollar. So if we look at the week or the weekly performance, little has changed. We have the Japanese yen being the biggest winner, up 0.32% against the dollar, and the New Zealand dollar down negative 0.72%. And if we extend this to a month, then all these currencies have largely been gaining against the dollar, mainly because we have seen the dollar index dropping as a result of the expectations of September rate cut. So as we continue, if you have any questions, feel free to type that in the live comment section, and I'll be responding to that on the go. So looking at the comment section, I'm seeing some comments. Hello, Wangari Patrick. Jane Sila Jesse, hi. Jason, good evening. So there's a good question here from Alan. Hi, bro. I'm interested in your current outlook on gold. Are you favoring a long or short position? Also, how are you planning to approach this Friday's NFP release? Thanks for sharing your insights. So I'll be responding to this on the next part. There's a question on USD JPY. I'll be checking on that. And also we have another question here. In case the Bank of Canada proceeds with a rate cut, do you think that the market has already priced it in? Again, can the market price in a big development like a rate cut in a single day? So I'll be addressing that. I believe we are through with the section where we basically focus on the economic calendar and the major news in the markets. So at this point, I believe it's the right time to jump straight into the MetaTrader 5 trading app and then try to understand the prevailing market patterns. So first, the dollar index, just to get an overview of what's happening with the dollar. Clearly, we have been in a bearish momentum. So if we go to the 4-hour chart, this has been the prevailing trend. So the dollar index has been losing for almost 10 weeks now. But last week, it had a pretty good momentum, making an impressive recovery, approaching the upper trend line. And once it got to the upper trend line, we are seeing signs of reversal. So, sorry for this. So from what we saw yesterday, there was a little to no market action for the dollar index. Remember, the market was closed as the Americans were celebrating the Labor Day celebrations. So today we have seen an uptick here, an attempt to move higher, which is currently being met with strong selling pressure. So it's likely that we could be seeing the dollar ending the day being bearish. So with that in mind, and now looking at other currencies, we have seen the Euro USD basically continuing to lose for a sequence of days. I would say for 7 straight days, we have seen a very strong bearish momentum. But now approaching this support area, which was a former resistance around this area here, you can see the market has simply found some good support here, and the price is bouncing nicely from this area. So we could be seeing a rebound of these currencies as they continue their bullish momentum against the dollar, as investors continue to speculate on the September rate cut by the Fed. So for the pound, it's a similar thing. We have a double bottom that is in. So the bottom that we saw on Friday seems to be similar to the bottom we are seeing today. So this implies that the market is unable to form lower lows, and now we are facing a key level test where the market could break the upper trend line and push higher for a new price level. So in this case, looking at the price action, the pound has almost recovered everything it had lost earlier in the morning, and it's about to break the upper trend line that has been holding for the last 1 week. So a break above here should likely signal to a bullish momentum for the pound, perhaps now heading into highs that were seen as soon as last Friday. So we are looking at 1.31996 as potential targets, subject to confirmation if the market breaks this area. So pound yen managed to make a clean break here. There was a very strong rally yesterday, but then since then we have seen the yen strengthening following comments by the BOJ governor, Kazuo Ueda. So following that, the market went right back into pattern, and now you can see what's happening here. So the market gets right into pattern, does a retest, and now we are looking at what looks like a continuation pattern. So it's likely that we could be seeing the yen continuing its strength and getting to the lower trend line here. So this is the likely continuation for the day for pound yen traders. So for AUD-USD, we had seen a big drop here early in the morning, but now we are seeing the dollar weakening and the market is recovering. So potentially a retest of the breakout point. This is around this area, which was previously acting as support, now could be turned into a resistance area. And now we observe what happens with price. If the market gets here, there could be a continuation higher or even some further drop. So for USDN, it seems like the most interesting one. Yesterday, we had projected that the market would rally to this point. Somehow we missed the expectation. Market didn't quite get to 147.344. It was slightly lower. So this morning retested the same area and started dropping, erased all the gains it had made yesterday, which implies that now we are headed back downwards. And in this case, I would be looking to trade based on the weekly lows. So the weekly low that we saw last week is all the way down. So I will remove this. And this seems like the likely scenario ahead of the NFP, seeing the market dropping further downwards as investors continue buying the yen after the Bank of Japan governor promised to potentially hike interest rates in response to the data they are getting from the Japanese economy. So the Nikkei, which had broken upwards, is now moving further backwards. And I think it's time we remove the prior trend lines and now try to understand the overall impact of this range that we have been seeing. I would call it more of a channel. So this has been the prevailing price action. And since we got to that high that we saw on Friday as well as on Monday, we have seen the market making major drops and then pulling back and continuing downwards, which basically means that we are in a cycle where the market is now pulling towards the lower trend line again. So gold, this was the question we were having. So gold was trading relatively in a triangle for quite a period of time. So from around, I would say, the 20th of August, the overall price action was basically following this path. So then we had this breakout happening on Friday. The breakout is from the lower trend line, which was holding from all the way back in 15th August. And after the breakout, what we have been seeing is an acceleration downwards. So we had targets around this area on Monday, and then the market bouncing, pulling back and continuing. So from the projections I had made on Monday, I had expected that the price would rally strongly to this area before making a continuation, but somehow didn't get to the exact point. So we had weaknesses around this area here, price pulled back downwards, and then retested the same area earlier in the morning today. And after this retest, we have seen an increase in selling pressure. And now the key determining factor is around 2490, which was yesterday's low and the low in the Asian session. So if you continue seeing this bearish momentum, then it's much more likely that we should be seeing the market dropping further downwards to retest the 2475 price action level. So it's more likely that the market will drop and get to this area, which was previously acting as a resistance and now turned into a support area. So this seems like the likely scenario. And if you check the daily time frame, then you'd notice that this marks the third consecutive day where the market is pulling back downwards, meaning that gold is taking a temporary pullback after forming a new all-time high and staying there for a while. We saw the market staying along this high for consecutive 2 weeks and testing this upper trend line at least 5 times before the market was unable to break, and there was a big drop on the forward chart. So in this case, the previous forward candlestick seems like very strong engulfing against the green one. So in this case, it's much more likely that we could be seeing some further downside in gold prices ahead of the non-farm payrolls on Friday. So as for Brent oil, we had projected that the market would drop right back to the previous low. So from the forward chart, I remember drawing this potential pattern that almost completed, forming a W-shaped pattern. So for those that are not conversant with the pattern, it was based on the price action we saw here. And then after this area here, market going to the same bottom and then getting back to the neckline. So the pattern would have been completed if the market hit this area here. But since the market failed to complete the pattern, then sentiment turned bearish, basically expecting that the market would now likely continue pushing further downwards since we have consecutive highs that are getting lower over time. So in this case, we did some analysis here that after the pullback upwards, we would see some further downside momentum. So yesterday, the market pulled back upwards, and we projected that the market would continue going down. And now we have officially a break. The market hasn't crossed yet, but at the top of the hour, if the candlestick is still the same, then it implies that we have officially broken that support area, which will likely fuel further downside momentum. So it's very important to note that we are approaching the lowest price of the year. So since the beginning of the year, the lowest price that we had seen is around this area here, 74.787, which means that the market is already trading, forming a new low for the year. So the likely targets, if the market accelerates further downwards, include 72.5 price level. That is $72.5 per barrel. Of course, it's not going to happen in a straight line, so pullbacks are to be expected. But overall, I expect some further downside momentum in oil. So there was this question on the comment section. I believe it was about Canada. So we know that there is a very strong correlation between the Canadian dollar and the price of oil, mainly because Canada is largely reliant on oil. And if oil prices are moving up, the Canadian dollar tends to strengthen. If oil prices are moving down, then the Canadian dollar tends to weaken. So in this case, with oil being a dominant factor in the pricing of the Canadian dollar, then there is that overall expectation that we could continue seeing a much weaker Canadian dollar. So even if the Bank of Canada, let's say, refuses to cut interest rates, then the overall expectation is that we keep seeing a much weaker Canadian dollar. So while the dollar has been weak, you can see the consecutive weeks that the dollar has been dropping, about 4 weeks. We are seeing the dollar recovering quite strongly against the Canadian dollar. And some of the previous targets include the previous lows here. Now the support turned into a resistance. So it's more likely that USD CAD could accelerate here ahead of the meeting tomorrow, where the Bank of Canada is expected to be cutting interest rates. So in this case, I would say there's two factors that are fueling the weakness of the Canadian dollar. One, the weakness in oil prices, and two, the expectation of a rate cut tomorrow. So this might imply that we continue seeing upwards momentum in the USD card currency pair. So if you consider trading the pound card, even better, because if you go to the 4-hour chart, we had a nice pullback that lasted a whole week, and now the market is almost reversing the same, which means that the targets likely for this week include last week's high. So we could be seeing this market accelerating all the way up to 1.78468. So for the New Zealand dollar, which is the currency we identified as the strongest in the market, also had a pullback against oil, but now what we are seeing here is a market finding support along this area here and now bouncing off strongly. And if you consider last week's high, then we should probably be looking at this area as a potential target. So in this case, after the market bounced from the lower trend line, then we could be seeing an acceleration back up all the way up to 0.84734. So as for US equity indices, we have seen that the markets have really struggled to move higher. So for the Nasdaq, there has been this ascending triangle with a very strong horizontal resistance around this area here. And now that the market is open, you can see the price is accelerating further downwards, which means that we are likely to retest last week's low as we approach the end of this week. So a very strong bearish momentum currently playing out. So the most volatile session tends to be the New York Open, and it seems to be largely unidirectional today. Yes, there is a lot of volatility right now, so it's not the best time to be making a market entry. So remember, always at 4:30, if you're trading the Nasdaq, expect to see some increased volatility. And since the market was closed on Monday, now we are seeing even more volatility. But my expectation overall is that the price continues dropping. But it's always safe to wait for the first 15 minutes to get a definitive candlestick. So after 15 minutes, we'll see the size of the candlestick, the direction, and the nature of the candlestick, which might imply the proceeding direction for the rest of the session. So for the Dow Jones, we are seeing the opposite reaction. So instead of the market going for a new low, as we are seeing in the Nasdaq, in this case, we are seeing the Dow Jones looking to retest the high. So it has had new all-time highs last week around this area here on Thursday as well as on Friday. So Monday, there was little to no activity. You can see the price action yesterday. And today, the market has been attempting to pull back downwards. So in this case, we keep observing the price action levels to try and understand where the market might be headed next. So in this case, if there's a drop, I don't expect to be that drop to be massive. But in this case, it's only likely that a drop would approach this trend line here. And if it's a rise or a rally, then we could be seeing the market retesting and forming a new all-time high around this price action level. So we just have 15 minutes to observe, see how the market concludes the first 15 minutes after open. So for the US 500, it seems more likely that this has remained a core theme, that the market is just trading sideways. There's not much of a direction. So for 2 weeks plus, the market has just been moving sideways. So right now, we are seeing a very strong acceleration from the previous high. So the market retested this high early in the morning and now is accelerating downwards. So for very short-term targets, it seems likely to target Thursday and Friday's low. So this could be a very short-term target. Then if you're confident with the sell-off, then you could extend your targets all the way down towards the lower trend line, somewhere around 5,562. So the Russell 2000 index had broken the lower trend line. So notice how it had progressed, basically rallying about 13% from the August low. So from this area here all the way up, we are up 13.18%. But now during the market open, what we are seeing is a very strong bounce at market open. And remember what I said, we wait for the first 15 minutes and see how the candlestick crosses. So if it's a strong vote of confidence in the bulls coming back into the market, then we might consider going bullish. But then also you have to be aware that we've had a descending trend line for the last couple of days. So if I go to the 1 hour chart and then I zoom, then from this high, we have had, I would say 3, 4, 5 times that the market has rejected that trend line. So we should be observing the price action around that level. So after the break happened here, the market is pulling back. So now we observe what happens around this area. If the market cruises and breaks above, we go bullish. But I'm still very skeptical. I still think this break was significant. The lower trend line hasn't been broken from all the way back down. So notice from this area, it has been a consistent bounce from that trend line. And now that we had a confirmed break, it's more likely that the market could continue pushing lower. So let's wait and see what happens here and whether the market drops to 2176. So Bitcoin, as we had mentioned, we had a major break here. So after attempting to move higher for a while, I would say the overall price action in the channel was following that direction. We had a breakout at the beginning of the week. The market has pulled back, retested the lower trend line, and now it's more likely that we could be seeing some further downside momentum towards the next available level. Of course, we have an available level around 56,100. So it seems more likely that we could be seeing some further downside in Bitcoin. So NVIDIA has opened with an even bigger gap. Remember, last week we had NVIDIA earnings, and after the NVIDIA earnings, the market gapped downwards. So the market opened with a big gap. So I would say from the earnings date, we have seen some further downside momentum, with the company losing about 10% of its value within a span of 2 weeks. So in this case, it seems like an overall market panic, and this is expected to add more pressure to the downside momentum in the top US indices, especially the NASDAQ 100 as well as the SP 500. So the bearish momentum is expected to continue. So the dollar trading against the Swiss franc, dollar had managed to mount a comeback. From yesterday, we were expecting some further downside momentum. This didn't play out, but today you can see the volume is coming in and the original idea is now being played out. So shorts on the dollar against the Swiss franc, targeting the previous low, might be playing out all the way down to around 0.83995. So for New Zealand USD, we are also seeing a potential bottom here. So market could potentially find a bottom here and start moving further upwards. And that's based on the weakness in the dollar. So as the dollar starts to show some level of weakness, we could be seeing the bullish momentum resuming from here, even from the 4-hour chart after the pullback here. If you look at the daily, we had a very strong acceleration, a pullback. Perhaps we could be witnessing another retest of the higher prices. I don't think it's likely to happen today. So it's more of an observe kind of market, chill back and wait, and then see how it plays out. So for USD CAD as projected, I expect some further upside momentum here. So with that in mind, I'll be checking what you guys are saying in the comment section. So I've responded to Alan Ryan. I hope that answers your question. We covered USDN, so that answers Tapscade. For Wangari Patrick, we have covered the Bank of Canada, and as I've mentioned, there's too many forces that are supporting a weakness in the Canadian dollar. I believe the announcement will be buy the news, sell. Sorry, buy the rumor, sell the news. So the best time probably to be shorting the Canadian dollar seems to be today, going all the way to before the announcement. So when investors borrow the Swiss franc, are they shorting the currency? This is a very good question. Yes, they are shorting the currency, meaning that if the currency value goes down, they will still pay the same amount, but the currency will be weaker, so they benefit when the price of the Swiss franc goes down. So in that case, they are net short on the Swiss franc. So are you hiring for market analyst? No, I haven't seen any opportunities so far. but if I see, I'll be bound to share. So if you're looking for a job, I would advise you check mostly on LinkedIn. That's where we basically post opportunities. So there's a question on CHF against the JPY. Usually it's rare for me to cover the crosses. So from what we are seeing here, it's a battle of strengths. We know that the Swiss franc has been strong, and now we are suddenly seeing a very strong Japanese yen. So I don't know what to think about that. So from what we are seeing here, seems likely like a market that is still within the channel, made a pretty nice bounce. I don't know how much it will accelerate, but clearly the idea is to continue trading within the channel as the market continues with these swings. So for now, I don't know which one will be stronger than the other, but from a technical trader's perspective, we are just currently on an upswing right from the lower trend line. So, good question from Gerald. Please explain for me what happens when a central bank cuts or hikes interest rate and how the market reacts to such actions. So, generally, whenever a central bank is hiking interest rates, most of the time it's trying to address a problem with high inflation. So, the hiking of interest rates is meant to reduce liquidity within an economy. So we have seen this happening in Kenya when Kamau Thuge became the central bank chair. He basically pushed the interest rates a little bit higher to 13.5% and helped stabilize the value of the Kenya shilling. So since then, the Kenya shilling reversed from a high of around 163 all the way down to the current level that we are seeing of 129. So increasing interest rates basically drives liquidity in the market, since it makes bonds very attractive. So you see a lot of investors going for bonds. I'm sure you've been seeing a lot of bond information trending, mainly because rates were high and the yields from bonds were very attractive. So a lot of money flows to the central bank, reducing the amount of money in supply in the economy. So in that case, leading to a strengthening of the currency. So the opposite is true. So when central banks are doing the opposite or cutting interest rates, then in that case, the currency is expected to weaken. So besides that, and the reality of that kind of reaction, in Forex trading, there is often a different approach to this. So when a central bank actually cuts interest rates, you might see an opposite reaction in the market. So instead of the currency weakening immediately, we might see the currency strengthening. So main reason for that is because investors and traders don't wait until the central bank cuts or hikes interest rates. They will be observing the data through forward guidance that the central bank is following to make a decision. And if the data is indicating that the central bank is going for a cut, then they will be selling the currency way before. So we have seen it happening with the dollar index. The dollar has been weakening for the past couple of weeks. I would say 8-9 weeks. The main reason it has been weakening is because the markets are trying to price in a 25 basis point rate cut that is due to happen on the 18th of September. I hope that answers your question. So, most promising pair of the week. I don't know. I would go for the indices. They seem pretty easy to go for a short selling trade, especially for the Nasdaq. The Nasdaq has been unidirectional for the better part of the day, so it hasn't formed a pattern that indicates otherwise. So after trading in this triangle for a while, the book pattern basically dictates that if there's a break downwards, then the market is likely to go to the base of the pattern. So 19,105 seems like a likely target for the Nasdaq. So also, I'm quite bearish on the Russell 2000 index, despite the big jump higher during the market open. Remember, this is just the first 15 minutes of the trading. I still expect that the break was quite significant and we could be seeing a big drop to 2176 price level. So, comment from this account using All Sports TV. Hi Rufus, as we know, the development in oil prices impact a lot of Canadian dollar. Which developments will ensure a clean week or strong Canadian dollar tomorrow? I mean, consider the developments in oil. So I don't expect the Canadian dollar to be strengthening tomorrow. So I expect some further weakness. The one of the reasons is because oil is weak, which is fundamental. It has a material impact on the price of the Canadian dollar. So I expect some further drop. And in this case, if the Bank of Canada actually confirms a rate cut, then the expectation will be forwarded to the press conference. So remember, there will be a press conference after the announcement. The press conference will be happening around 5:30 p.m. So during the press conference, if let's say the Bank of Canada considers holding rates at that level or basically avoiding further rate cuts, then in that case, we could be seeing the Canadian dollar strengthening. So it depends on the commentary that we get from the Bank of Canada chair. So which of the two reports today will significantly affect gold? It's basically the ISM manufacturing PMI. That is it. That's the one report that you focus on today. So from Mike Mugambi, September is the month for USD. The dollar is always strong since 2017. What's your take about it? This seasonality in market trends has not been playing the same since COVID. We know that there are those seasons that we follow a lot of common practices. For instance, sell in June, come back in September. That hasn't played out. If you sold your stocks in June and you come back now, you realize that the stocks are close to near all-time highs. So that seasonality doesn't apply. So those correlations in seasonality have not been playing out, including the Santa Claus rally and so on. So in this case, just follow the fundamentals and what's currently happening with the Fed. So that will likely give you a better information rather than following the seasonality. So what's likely to happen with the DXY? I believe the red news you're talking about is the ISM manufacturing PMI. So as I mentioned, if the PMI is positive, the dollar strengthens. If it's negative, the dollar weakens. So the last question I'm checking here is from Wanjohi. So seen economists say that they are looking closely to ISM price due to disinflation. So yes, there has been quite a number of revisions that have shocked the market, including the job market report that showed that the non-farm payrolls had been hiked by about almost 900,000 since the year started. So that downwards revision raised a red flag in the stability of the US economy and the potential for the US economy getting into a safe landing. So, so now everyone is watching the ISM manufacturing PMI to know the conditions in the manufacturing sector, since other sectors are also seemingly facing more problems in the markets. So it will be a big economic report. And now combining that with the data we got last week on Friday, where inflation is dropping as expected, then the bets could rally for a 50 basis point cut, and that would imply the dollar index continuing to weaken. So clearly, if there's further weakness in manufacturing, that would push the Fed to consider an even bigger rate cut to avoid crashing the economy with high interest rates. So that's it. That's the complete summary for the day. I hope that you guys enjoy a good New York trading session. So the last thing I'll be sharing here will be the event that we have this coming. We have an event this coming Friday. It's called the Pips and Brunch. It's free of charge to attend, and it will be happening from 1 to 4 p.m. And the location is the Indigo co-working space. So what to expect is that we'll be sharing timely insights into market volatility during the non-farm payrolls data release. We'll be having expert-led sessions on market analysis, trading strategies, risk management, as well as trading psychology. So if you just joined this session for the first time, you should know that we have a podcast where we cover more topics on global markets, trying to understand what are the prevailing patterns. And once we cover all that, our traders get the benefit of trading from a more. So new episode is coming up. The last one that we did was with Miss Gathoni and Neema, where we basically talked about markets, risk management, as well as trading strategies. So make sure to check it out on the FX Pesa YouTube, and hopefully you will be having some good lessons to learn. So just go to FX Pesa YouTube and then check out the podcast section. Then you'll see the most recent episode. So thank you, everyone. Thank you for your time, and I hope to see you on the next one.